Hi everyone, this is Stephen from Share Navigator with a trade update on April the 23rd. So you're looking at a chart here of the S&P 500. Um, so you can see yesterday a bit of a rally. It was actually up quite a bit more actually at one stage. I think it was nearly up 1.5%. But ended up today up 0.9%. We spoke about that the indicators here were kind of deeply oversold, especially this 20 or 5-day RSI. You can see it's crossed above 20. So um, we kind of talked about expect a bit of a relief rally as well, and kind of given the way things have kind of calmed down a little bit in the Middle East as well. Earnings coming out strong, SAP were out yesterday with strong earnings, or this morning with strong earnings. GE have come out with strong earnings. And then, of course, this week, as we've said, we've got the Mag 6 reporting. So, you've Tesla tonight, I think. You've got Meta, you've Microsoft, Google are all reporting this week. So, big week for earnings as such. And then on Friday, we've got the inflation data. So, all of this may create positive catalysts. But I want to kind of just remind you as well that, like, at the end of the day, we're still in this short-term downtrend. And if you look at here, this is a short-term downtrend, and then there was small little uptrends within the short-term downtrend, and that's to be expected. Look at this big up day here that happened back in October, followed by 3 or 4 more up days, and then it made a new low. And my best guess at this moment in time is that's maybe something that's going to happen here as well, potentially. Now, obviously, game changers on this are inflation data. If the inflation data comes out on Friday, totally under expectations, well, then that might change the goalposts a bit. But at this moment in time, based on where interest rates and everything are at, my best guess is that we're going to potentially make a play for this 200-day moving average after relief rallies. That's where we are at this moment in time. Futures today is showing a slight increase again. So I'd expect this probably to make its journey up to 70 at one stage. And then possibly we retest the lows here again. As regards our short futures trade, still planning to exit at 4,900. That's not changing. We're going to exit at 4,900 and walk away from the trade. What I might do, if this rally continues and let's say we go up substantially, the short puts the puts that we sold on either the options or SPY, we might actually close them out and take that profit off the table. And that will free us up to be able to actually walk away from this trade again if it does fall down to 4,900. So again, I will let you know if and when I decide to do that. Just on the active trader watch list, just the trades we've placed today. We sold Glaxo or GSK. You can see there that we sold it earlier on. We got the alert that the 5-day RSI reached 70. So remember, this strategy is simple. You buy when it crosses 20, you sell when it reaches 70. So earlier on, it was up more. We sold it, we closed out of it, and we made a 1.88% profit, which is great. And that trade happened over 12 days, guys. So not a bad result in 12 days. So we've still got 2 outstanding. We're down about 1% on this Capgemini one, but it is starting to make a move higher again. Again, no matter what happens, when this reaches 70, we will exit this trade. And the same with MTX here, okay? So we're going to exit that. That's getting close. And we're kind of break even on this one here at the moment. But if it RSI reaches 70, we'll walk away from that. But just for today, guys, just so the alert is, GSK was closed. It's closed today. We've walked away from that trade and we've locked in our profit. We made 1.88% in 11 days of trading, which is excellent. So just back to the major indexes as such. I'm just going to look, sorry, my apologies. We're going to look at the active trader watch list. So you can see here at this moment in time, there's actually only 5 stocks now. Like there was over 20 here at one stage that actually have their RSIs below 20. Now Flutter has just crossed up today. It's made a big move up today. This is one, and this is also in our long-term buy watch list as well. But the remainder, these 4 here, so we'll probably take Flutter out of here unless you place that trade. So remember, we're not participating in this, but nearly all of the stocks that we had in here are actually gone up But we've said we're not going to participate while we feel that the market may take another leg down. So we're just going to keep adding to this watch list, keeping it built up, taking stocks off when they fall out of the RSI being below 20 range. So remember what these are: quality stocks, their 5-day RSI below 20, trading above their 200-day moving average, that are, have substantial upside going forward as well. And we're going to trade them rather than invest into them. And at this moment in time, we're putting a pause on those trades until we feel that this market has actually bottomed out. So back to the market itself. Just want to focus in on bond yields. And I think there's a bit of news out today in the European economy as well, or in Germany at least, that there's a bit of a rebound occurring in the European economies. That's important, and it's news that shouldn't be underestimated. And the reason I'm saying that is that if that continues, the likelihood of the ECB cutting rates may diminish, and it actually could equal a weaker dollar. Because we kind of now know the market is priced in pretty much, on the US side, the Fed won't cut, but they've also priced in that the ECB will cut. And if the economic data starts to pick up, well, then you could make an argument that the ECB mightn't cut as aggressively as people thought, and that could equal a weaker dollar versus the euro. So for people who have US dollars in their account at this moment in time, for me, I think it would be wise to actually, unless you're going to invest them, actually transfer them over to euros. Because if this does transpire, you could see the euro dollar kind of go back out to that 110, 112 area. That's a 5% move. So I think it's important to be aware of that. So for me, while it's down this low, I'd actually only your excess cash. Would I actually trade this now? Possibly I would, but I'm not ready to do it just yet. It has surprised me though since the news came out. You can see the kind of reaction in the euro dollar today. It was stronger at one stage, went kind of weak, and now it's kind of just middle ground again. So the market doesn't really know what way to react. But I think that's not a good sign, given, take the context of last week as well. A couple of ECB finance ministers were out saying it might be the wise thing to do to start cutting rates so early. So, and now with a stronger economic data starting to come through, maybe the case is getting stronger for that. So I think the risks are now that the dollar actually weakens. And for me, I think, at a very minimum, I would suggest taking, your excess dollars and putting them into euros. The 10-year bond is still up over 4.6%, and that's still my argument for stocks. Not a good thing for stocks as long as that's there. So earnings have been very good so far, guys, and the market is down. So the market is, that tells you where the market is looking. It's looking at the Middle East and it's looking at these bond yields. And earnings are kind of just being ignored, at least for now. But that could change with these mega caps coming. If these mega caps blow everything out of the water again, you could see, a bit of a rally in the market as such. I would use that rally in a different way, though. My view is it's still, unless the inflation data changes and this bond yield comes down, my view is that the S&P will retest those lows again. So that's the broad market there, and the bonds and the euro dollar. Just focusing in on metals now. I focus in on energies. So natural gas here. So you can see now we're up above that 50-day moving average. So that's slightly bullish. It's not majorly up or anything like that. So need to take out two. I keep saying that we're at 180 at the moment. We take out two. I think it's a bit of a run into 230, 240. And we would have made a nice gain there. But that's a positive move there. And then crude oil just consolidating here above its 50-day moving average. So great for energy stocks. So it'll be interesting to see, does this start making its way back up here? And if we start again tipping $90 a barrel, that's great for energy stocks, but it's not good for inflation. And then finally, we'll just have a quick look at the metals here. It's a big down day in silver yesterday, followed through today. I think we come certainly here to the 50-day moving average. It wouldn't surprise us to see it all the way down here. And then down here on the copper side, copper's actually first real day. It's made a bit of a leg lower as well. So maybe a bit of profit taking going on, and you would expect that given the run that it's had. So again, I wouldn't be a buyer into these metals at this stage. I would wait for the pullback and the correction to happen. If I had gold, I would simply just hold it at this stage. So big earnings out this week, folks. A lot of stocks reporting earnings. A huge week. The next 2 weeks are huge for earnings. And they might start bringing back the positive momentum to equities. We'll have to wait and see. But I still think bond yields are a problem. And Middle East tensions, as long as they stay calm, that could be a bit of a catalyst as well. But focus in, that inflation data on Friday is going to be very important for the stock market. Okay, this is Stephen with a stock market update. Thanks and bye for now.